Good afternoon. You are watching Midday Market Update for Tuesday, 13th of March 2012, prepared by Windsor Brokers. A lot of action in the markets during the Asian and European session, with the markets accelerating. There are movements after U.S. session started, with U.S. retail sales giving another pinch to the markets, pushing dollar higher versus the number of currencies, and pushing commodities sharply lower. They started with the Bank of Japan's meeting that decided to keep the interest rate unchanged, and overruling proposal for more stimulus. As disappointing some in the markets who thought the central bank could follow up last month easing with another move to amplify the impact. The central bank instead extended the loan scheme targeting growth industries by 2 trillion yen to total 5.5 trillion yen. Now, under the plan, it created several new loan arrangements, including one that will tap its dollar reserves for investments, and the loans are denominated in foreign currencies. From the Europe session started with the Swiss PPI data showing that deflation risks risk easing as Swiss franc cap set at 120 helps for now. The PPI came at 0.8% compared to 0.4% forecast. The downward pressure on Swiss prices is easing as data showed today, evidence that a cap on the franc's value is helping shield the economy and bolstering views the central bank is unlikely to do more to try to weaken the currency. The Swiss producer and import prices fell 1.9% in February from a year ago, but were 0.8% higher compared with the previous month, as the Federal Statistics Office said on their today's release. The combined index last rose to on the month in December. Import prices climbed 0.8%. First turning positive in December after falling on the month for 6 months running, as the strong franc made imports cheaper. In a sign that broader trend reversal is underway, figures released last week showed that in February consumer prices posted their first monthly gain in 5 months. Citing the risk of deflation and recession, the Swiss National Bank capped the franc at 120 per euro in September, after safe haven investors worried about the Eurozone debt crisis pushed it up nearly 20% within just a few months. The next release came from Germany and the Eurozone. The zoo economic sentiment came much better than expected in both and Germany as well as Eurozone. The German release shows 22.3 today's release compared to 10.6 forecast, and quite low 5.4 on the previous month, while European zoo economic sentiment came at 11 compared to 3.8% forecast, and minus 8.1 on the previous month. German analysts and investors sentiment jumped in March to its highest level since June 2010, driving European equities to session highs and confirming hopes that Europe's largest economy has recovered from a weak patch. The Zoo Economic think tank monthly survey of economic sentiment jumped, as mentioned, to 22.3 in March from 5.4 in the previous month, smashing the also consensus poll of analysts for a moderate rise of to 10.00. The surprise for German business side will be positive. Analysts commented this, adding that a new debt deal for Greece had been agreed. The worst for Eurozone banking sector was widely seen as over. UK January trade deficit also rises from December's 2-year low. The Britain's goods trade deficit widened less than expected in January after touching its narrowest in 2 years at the end of 2011. Official data show today, keeping hopes alive that the economy is rebalancing. Total goods exports to non-EU countries rose to a record high, helped by car sales to the United States, Russia and China. Total oil exports also hit a record peak due to higher oil prices, though Britain's deficit in trade in oil widened. The Office for National Statistics said the goods trade deficit grew to 7.532 billion pounds in January versus forecasts for 7.88 billion pounds, and from 7.184 billion pounds in December, which had been the lowest since December 2009. The U.S. February retail sales that were the last to be released rose slightly above expectations, growing at the fastest pace in 5 months in February as spending increased at auto dealership, gas stations and clothing stores. Retail and food service sales increased 1.1 from January to a seasonally adjusted 407.81 billion US dollars. Sales were up 6.5% year over year. As an immediate reaction, there's signs of improving pace of the recovery of the U.S. economy that were also boosted by last Friday's non-farm payrolls data, as well as today's retail sales helped the dollar that lifted the greenback across the board according against the versus the basket of the world currencies. As immediate result, also the Fed's meeting and monetary policy decision that is due today now comes in focus with the U.S. Federal Reserve already started the meeting where the policymakers are likely to leave monetary policy on hold but not rule out further easing as they acknowledge a somewhat brighter economic outlook. In the latest release pointing to strength following last week's firm reading on employment, U.S. retail sales also climbed today, the biggest gain in 5 months. Still, the U.S. Central Bank is likely to remain concerned by an unemployment rate that remains at an elevated 8.3%, a symbol of what many officials see as high level of unused productive capacities. The U.S. The Fed's data release is due today at 18:15 GMT. The euro, as a result, dips on the stronger on the positive US data and the stronger US dollar, as well as British pound that recently shows some signs of recovery as it bounced higher, while dollar keeps strong against Japanese yen, holding just off recent 11-month highs, and the dollar Swiss is heading north, looking for test of 92.50 and 93.00, our initial target on the short term. Brief look at the markets and see the latest movements. Euro extended its downtrend of 132.90 with the lower top at 131.90 posted today, extending losses through the previous low, at 130.77. So far seen 130.51, which marks 50% retracement of the broader uptrend from 126.22 up to 134.85, where the latest recovery of 130.26.22 mid-January low were capped. The risk is seen on the downside as the studies turn negative in the short-term outlook, keeping the focus on the downside. The break below the current low at 130.51 opens 130.26, 130.00, possibly 129.73, low of 16th of February 2012, as long as upside remains capped at 131.90, 132.00. The pound, after losing initial and strong port at 156.50, dipped today to 156.01. That marks 50% Fibonacci retracement of the broader up move from 152.33 up to 159.91, where the found a temporary footstep for now, and the bounce higher despite the weakness down to 156.20. Returned back to the previous levels, even breaking above the day's highs at 156.72, hitting so far 156.81. Basically, we need to see them cut above 157.00, 157.10, where it's 20 days moving average in order to avoid immediate downside risk and look for some stronger recovery. On the upside, regain of 158 and 158.30, recent cap of the cable's price action needs to be seen and lift above these levels in order to improve the short-term structure. Otherwise, the focus will remain on the downside and the loss of 156 to open 155.23 Fibonacci level and 155.00 around figure support. Dollar yen, today's bounce of fresh day's low at 81.95, where the 82 zone along with the 55 and the 20 days moving averages held mainly the downside. Fresh strength that emerged from there reached a new fresh 11-month high at 82.85. The studies are positive and the focus is at the upside with the 82.93 Fibonacci level, 38.2% of 2010-2011 down move from 95.94 to 75.56 seen on a break. Dollar Swiss extends its recovery after finding support at 91.38 earlier today, as the recent pullback of 92.17, yesterday's high, reversed close to 50% of the initial rally from 90.70 lower top of 8th of March. Fresh rally through 92.00 so far reached 92.39 en route to initial barriers at 92.50-60 previous range ceiling, and the more significant 93.00 peak of 16th of February 2012, a break of which is required to confirm the bottom at 89.30 zone and the refocus levels at and above 95 area. Yellow metal comes under pressure again. A stronger dollar pushes the gold's price lower. Loss of initial support at 17.00 and 16.92 so far, seeing the dip to 16.83 that briefly dented the main bull trend line drawn of 16.63 low of 6th of March 2012, with immediate risk at the downside on test of 16.77, our next static target. On the upside, as studies are still negative but approaching oversold zone on the hourly chart, possible bounce higher is not ruled out. Immediate resistance at 16.92, 17.00, where is also 20 days moving average, and slightly above this is 55 days at 17.02, ahead of today's high at 17.05. A key resistance on the short remains at 17.25, which also marks 38% Fibonacci retracement of the down move from 17.90 down to 16.63, and only a break above this level would improve the gold's short-term outlook. Otherwise, the downside remains in focus, with possible break below 16.77 to turn focus towards low at 16.63 posted on 6th of March 2012. Have a nice day.